We will begin with the panel discussion, Challenges of Self-Insurance, Digital Disruption and Transparency. This will be moderated by Mr. Richard Cutcher, editor of Captive Review. Richard has been the editor of Captive Review since May 2014 and is an experienced speaker on captive insurance topics globally. Captive Review is the world's preeminent trade publication on captives. Joining him on the panel will be Benjamin Tausig, the head partner, tax partner, financial services, Deloitte Southeast Asia. George Kesselman, co-founder and CEO of Anapi and InsurTech Asia Association. Shiwei Jin, global program and captive regional director Asia for XL Catlin. And Jose Ribeiro, the managing director Asia Pacific of AM Best Asia Pacific. Please welcome them with a round of applause.
As with the last panel, however, we have got a really good diversified group of experience here. We've got carrier, we've got a tax expert, got a ratings agency, and of course we've got George as well, who's kind of really heavily involved in the InsurTech side in Asia. And so George is definitely the person we're going to all lean on when we all find ourselves becoming technologically impaired. So George is going to get us out of jail a few times. As with the last session, please do start using the Slido app and submitting questions. We'll try and take questions definitely in the second half of the presentation. But we've actually got a couple of poll questions, so please do get your phones out and start engaging, because we want to get an idea of what kind of knowledge people have of new technology and their experience of new technology. So if we can bring the first question up, I'd just like to ask the audience, to what extent have you considered implementing or even just testing new technology at your organization? So I want to just find out from people, how far along are we in implementing new technology into our insurance companies or even risk management processes, or other areas. So well, at the moment, it looks like from the votes we've had in, and people are pretty active, and no one's not considered it. So no one's ruled it out completely. So that gives us an idea that most people in the room seem to have some knowledge of new technology and how it might be helping the insurance industry. I think everyone on this panel has had some experience to some degree of new tech. So that's a nice start. And then if I want to go straight on to the second question, if that's possible, we'll close that first one down. And if we're going to get a bit more technical, while you're looking at that second question, I just want to ask George to run through what we mean by each of those individual areas. So artificial intelligence, blockchain, API, interface, and big data. And then you can hopefully answer the question which one you're most familiar with. So if you want to start off, George.
Sure. So as it starts to jump around, I'll kind of try to go from artificial intelligence is basically, it's a machine learning artificial intelligence where we start to see computers become more sophisticated when it comes to new types of data and analyzing it very dynamically. So this is a new field where the data science is playing a big role. Blockchain, I think a lot of you probably heard about it. There's a lot of discussions going on about potential applications. It's a new types of connectivity of data. I guess this is new type of database that is encrypted, that is smart and has some attributes that we've seen implemented very well in things like blockchain. Bitcoin is powered by blockchain. So this is one of the applications that people are most familiar, but there's a lot of other that we've seen in insurance. API is connectivity between applications. So this is the connectivity between applications existed for a long time, but API is taking it kind of on the steroids. So combining data through application programming interface and making it very, very seamless in terms of connectivity. It's number C. Number D, interface. What we mean by that is all kinds of new types of interfaces. So Alexa, voice, visual, and all kinds of other applications and interface with the machines. And big data obviously is a lot more rich data, a lot explosion of data that we're seeing. So not just a small data, kind of a individual statistically analyzable, but the big data that is pervasive basically in everything.
Great, great. Thank you, George. So what's your first reaction before I ask you to talk about what the main developments are in Asia's InsurTech space? Does those answers match up with kind of your experience of the market and where the most interesting things are happening in InsurTech in Asia?
I would say that big data is probably one of the most familiar because insurance has always been based on data and it has a lot of rich data. I think the big data itself, the data by itself is not that powerful, but it's what you do with the big data. I think the concept as a concept of big data is very familiar to a lot of people, but I think other things that are probably lesser on a kind of a chart, I would say those are the things that are really starting to heat up. And it's good to see that there's kind of that natural progression. And in fact, we kind of, I would argue that the last part is one of the most powerful on the API front. So I'll elaborate on that shortly.
Yeah, great. So well, if you let's go straight into that on the API side, because in terms of what the main developments are in the Asia InsurTech space, what kind of innovations are we seeing related to API and connectivity and open data?
So what we're starting to see is that API specifically, it's a concept about connectivity of services, connectivity of different applications that basically, if you think about, I'm sure a lot of you are familiar with the likes of Grab, Uber, using all this type of new digital applications. All those digital applications are packages of APIs to a large degree. And people don't recognize that because basically what it does, it packages things like maps, payments, and everything else in between. Insurance is we're starting to see the insurance heading in that direction as well, where it becomes easily pluggable into other services. It's still early days. The example that we saw on the API, and I think that's something that one of the kind of key things that happening on the regional scale is that we're seeing things in China specifically going into the kind of Zhongang territory. So Zhongang is a very interesting insurance company in China where they basically reduce the insurance to very, very small bite-sized products and then made them embeddable through APIs into the digital ecosystem. And all of a sudden, that point just exploded. So it went from being nothing 4 years ago to powering the likes of millions of policies a day and kind of having very, very high transaction volume. So to me, this is kind of where the power of API comes in. On the, I think, captive side, I'm not sure if there is that kind of a huge application for time being, but in terms of the overall InsurTech, API is going to be something that makes that much more frictionless in terms of risk being transferred from one location to another.
Thank you, George. So one of the options there is blockchain. And blockchain is, I would say that's the one I'm most familiar with in relation to insurance because we're starting to see a number of carriers, but also brokers kind of form consortiums to work on pilots to how blockchain can be implemented with insurance programs, not necessarily just captives, but kind of global insurance programs. And Shiwei, you're with Catlin. Catlin's been involved in one of the more high-profile examples called InsurWave. So I'm going to hand you, if you can go back to the slide deck away from the questions, and we'll get started. Shiwei's going to run through a bit of what InsurWave is all about. Oh, and Jose's phone's going off.
Yeah, well, I think this morning we have a few technology digital disruption, but on InsurWave. So thank you very much, Richard, for this opportunity to talk about the InsurWave, which is one of the ongoing blockchain initiatives in our industry. And XL Catlin is proud to be part of this initiative. And my personally, in particular, is very excited about this because with a business and also strategy background to see how our industry is transforming through collaboration and also through this technology innovation is really something phenomenal. So on InsurWave, it was just live in the end of May 2018. So after more than 18 months of work, which is similar to the overall blockchain initiatives in the industry. If you see from the beginning, the B3I and also various programs implementation, it's all roughly started about 2 years or 18 months ago. So this, as you see from the slides, this includes a whole partnership of the value chain. So we have the broker, we have insurer, reinsurer, and most importantly, we have the client, Maersk, also involved from the very beginning, the proof of concept, to the very end, to now, when it's launched. And also, here we also have Accord, which is an industry standard firm. So that means, from the very beginning, how to make it scalable, how to have this data standard applicable to the whole industry is in the mind of the project team. So here is the clicker, let me see. So,
Green. Yeah.
Green. Okay, so what it is, InsurWave? At this stage, since it's go live, well, it's focusing on the marine hull insurance. So if you take a look at the whole marine hull insurance, and once Maersk actually mentioned, to insure one of the vessels, you will need more than 100 paper transactions and involve 50 stakeholders just for insuring one vessel. So what we do in the beginning is, for this, this is live already since the end of May. And this is a register. So blockchain, ultimately, it's a agreed register of assets or currencies. And or you can have a smart contract run on this technology as well. So the phase 1 of this project, it's the registered of assets. So these assets in particular is vessel. So vessels is a very movable, big value asset. So by the end of this year, so in the first year of this application, this InsurWave will support more than 500,000 registered transactions that register, and also to manage the risk for more than 3,000 vessels. And this is a kind of phase 1. We are working on the phase 2, which is to enable the smart contract. So which is, smart contract basically is a predefined agreement. So contract, the elements of all the contracts predefined, then built into this blockchain, the background. So what we try to do for the phase 2 is, let's take example. If you have a vessel that goes through the war zone, so when it's approaching, then this InsurWave will detect it's approaching, and automatically it will show that the premium will increase by what percentage, because you are going through a war zone very soon. And the captain of that vessel can make the decision, okay, this is the premium which will go up. And if I take a detour and go surround this war zone, how much fuel would I need? And extra day would I need? Whether that suits my goods, etc. Then by this very informed decision, then it's also bring the policy very much automated. So if it still go ahead, then the policy itself, through the smart contract, will be automated, updated. And then if they make a detour, again, the policy will remain the same. However, the vessel, where it is and where it goes through, is also very clear. So this shows some of the interface that the user would have. So blockchain sits behind it. The users, when they see the register, the ledger, it will show as a normal interface. So the interface you are more familiar with. And what kind of problems do we really solve? So here, list out a few. But what's the key to myself is security. So blockchain provides a very secure atmosphere, this technology background. So one of the tech guy actually mentioned to me, it's next to nothing about hacking the whole blockchain. So I will later ask George to comment on that a bit more, because to me it sounds, okay, great. And again, security. Secondly, it's they remove the friction of the transactions. Thinking about, again, on this marine hull insurance, which is the current application. So to insure one, just now we talk about the paperwork, and think about the risk management perspective, which is what we do, and I think the majority of the participants come from the companies, and you do risk management. So for Maersk, the risk manager mentioned for the marine hull insurance, about 75% of the staff time, they are spent on the policy administration. Because of the frictions, as the value chain is really long, just now we mentioned about 50 stakeholders. However, when it comes to the blockchain, then it removes away all these frictions because there's no central owner. So from a technology perspective, this is very important. If you have a central owner, this owner will need to do the emails, do the Excel file, whatever you need, and pass on to the next one. Then if you have a very long value chain, everybody involved in this will receive different versions, and then they will make comment as well. So this kind of, the benefits, the problem we are solving is take away the frictions so that they free up the time so that you can focus on risk management, and also that can more tangibly also reduce your insurance cost. And I think the third takeaway is it's the control. Well, it provides the transparency, but the transparency, you might think, okay, it sounds very open, everybody can have this. Is this, you said it's a secure, okay, from technology level, but is this, you have the control of the data? Yes, you do, because for InsurWave, different from the Bitcoins or the other kind of blockchain you are more familiar with, that's public, permissionless. So InsurWave is based on permission. So each party, they will have a predefined access. And then they will also have a set of rules on how the data shall be verified and then published. And if there is any data point which is wrong, and how that will be revised. So to me, it's the three big problems it solved. And this is this is a impact on the supply chain, which give you a bit more vivid concept on how this really evolves, how many parties are carry on, and what blockchain records are tracking. And what's next? So just now we talk about what is InsurWave now. And to me, what's more exciting is what it would be in the near future. Because InsurWave, which is different from some of the other blockchain usage now, is in our insurance industry is it's an open platform. So already other clients as well as insurers, they are already shows interest, and it can be adapted to accommodate other insurers as well as other clients. And also itself, the platform can also be utilized for other products. So aviation, marine cargo, those type of movable assets, which also have similar problems, will be of consideration as well. And lastly, but not least, is this platform is also open to other platforms. So InsurWave, it has this connectivity, although it hasn't been tested yet, but has this connectivity to other platforms of insurance industry that they can join up together. So I think this is really exciting. And one of the biggest takeaway from this is really through partnership, and also listen to your client. Because without I read one article, and also by talking to some of the people who directly involved in this project, that is from the very beginning, the involvement of the clients, and to talk about what's your problems, whether this blockchain, what we are planning this would address, could address some of your questions, some of your problems. And after the proof of concept, they actually modify what they planned in the very beginning. So this is a great kind of partnership to show what blockchain can really bring to us. And I think this morning, when Oliver gave the keynote speech, one thing he said really stuck in my mind. That is, be bold. I think this is our industry taking a bold step to really see things a bit revolutionary. Because everybody will say, oh, marine insurance is the oldest one. It has always been like this, and it will be like this going on. But then we don't take it for granted. We challenge ourselves, and we bold about the solution. So this is why I'm really excited about this solution. And hopefully a similar solution as well as similar applications for blockchain and other technology could be utilized through you, through your partners that can transform our industry.
Thank you, Shiwei. And I think, am I right in, you said it was kind of open to the wider market. Am I right in thinking as well that InsurWave is designed to be applicable to other clients as well? So it's going to be rolled out maybe for other marine clients and for available for other types of industry to use this prototype?
Yes, absolutely, because this is already go live, so it's not a prototype anymore. And currently, the team is focusing on serving Maersk. It's the pilot client, because it gives you data. All the vessels running through the world is a test of the blockchain, how this is interface, etc. So now they are focusing on the client, but definitely the next stage is to open it up to other clients, insurers, partners, as well as products and other platforms.
Thank you. Thank you, Shiwei. And what I'm going to mention now is just a couple of other blockchain pilots or programs which are already running, which are, I guess similar in the sense that they're using blockchain, but also quite different. So another one which has been quite high profile and has been discussed in the industry is that second one there, which is led by, on the insurance side, it's led by AIG, and the client is Standard Chartered Bank. So Standard Chartered Bank have a global insurance program, and what AIG and IBM and the other people involved with Standard Chartered's program are doing is they're just testing the blockchain element on 4 territories. So they're testing it in United Kingdom, because that's where the master policy is issued. They're testing, and then they've chosen Singapore, United States, and Kenya, because they're all quite different markets in terms of how they buy their insurance and structure their insurance. So United States is obviously a very important market to Standard Chartered, and is state by state, changes in regulation. Kenya is an emerging market and quite problematic on reinsurance, so they're testing it there. And then Singapore, I can't remember the exact rationale for the Singapore territory, but they're basically just making sure they're testing it in 4 major important markets. And then the one above that is an Allianz program, which is apparently specifically a global captive insurance program. They haven't named the client involved yet. That was published in November 2017. And they've got multiple partners, but Allianz are the lead on that program. I just put a link on the bottom there. There's an article on Capture Review which discusses all the examples so far. We only published it a few weeks ago. And it outlines the InsurWave example, and then those 2, and the B3I blockchain consortium of insurers. And so it gives you an idea that there is, on the blockchain side at least, there is quite a bit of activity, and obviously some success stories already. I'm going to open this next question up to the whole panel, so I'll probably come to you first, Jose, if you don't mind. How, in terms of these initiatives specifically, or these kinds of initiatives, how do you see them improving transparency for the industry, and why is that a good thing? Have you got a microphone there?
Yeah. Microphone, yeah.
Yeah, there you go. Should be on. Yeah.
Can you hear me?
Yeah.
Yeah, okay. Before I address the transparency question, I would just like to say that in regard to all these technologies, I don't really see the technology disrupting the insurance industry. What I see is the insurance industry already being disrupted. And the main disruptive forces in the insurance industry are the easy access to capital, with the ILS and alternative capital coming into the play. So even despite we had a horrible 2017, the market rates continue to be flat. So the old years, I think Malcolm was alluding to that, if not Malcolm, maybe George, that there would be cycles. Right now, we are in a new world. The cycle is the soft market. So if technology is not used in a soft market, where basically what happened before is not happening again, then the companies that don't use it will fall behind and ultimately will not exist in a few years. So the disruption comes from the market, not from the technology. The technology is a solution to manage the disruption. So don't believe that the technology is disrupting the industry. The insurance industry is, the building blocks of the insurance industry are very, very similar since maybe 200 years ago. What is really changing is our ability to underwrite better, service clients better, reduce costs, engage with reinsurers and third parties in a more effective way, reduce fraud, reduce the risk of having different realities. So blockchain, for example, is a way to have one single version of the truth. So all the miscommunications, issues that lead to E&O issues, gaps in coverage are sorted out potentially by blockchain. So it's these technologies that allow companies in a soft market, which is the new reality, the new normal, to survive. On the transparency issue, I think blockchain in particular brings a lot of transparency into the insurance industry because everybody is uploading documentation, everybody is uploading entries from a variety of sources, everybody is seeing, according to their profile, what's being uploaded. And so it provides an incredible audit trail, for example, right? Because you know exactly, in regard to an issue, who uploaded what and when, and what was said or not said, what was agreed and not agreed. So that, of course, is extremely important for transparency. But in regard to transparency, there's two issues in transparency in my view. So one is the transparency that impacts the insurance contract, right? So has the insured been truthful, been accurate in terms of the information that is provided? Has the broker done their work properly and in a transparent way, dealing with conflicts of interest? Has the insurer really understood what was going to be, what needed to be covered? Have they produced the right coverage that meets the expectations? And then, of course, the reinsurers as well as other partners within the chain. But there's one other issue of transparency, which in my view is also very important, which is the transparency in terms of what each party does and how they are remunerated. And that is very important because if somebody is doing something and you don't know how much he's making, then you have an issue, right? And I think that is one of the issues that some of this technology also addresses. And so answering your question, Richard, after sort of a bit of a tour, I would say, yeah, mainly these new technologies, they increase the transparency in the insurance industry.
Ben, specifically on the tax administration side of things, in the types of these programs which have been outlined, what are some of the implications for kind of administration of tax and management of how tax is rightly paid in the right places, etc.?
Thanks, Richard. So I think one of the things that we're seeing with this is, and it's coming down the pipe, it's not today, but we'll see it soon, is the ability to deal with some of the more challenging administrative aspects of tax more easily. So insurance premium taxes have been a challenge for a number of captives, global programs, etc. It's where you see quite a lot of litigation in respect of amounts. And the reporting cycles for insurance premium taxes can be as short as sort of 15 days. Now, removing that administrative burden and having one single version of the truth around location of risk, having that done almost instantaneously through the use of a blockchain, and then aligning those your systems and having APIs with tax authorities enabling you to pay tax authorities seamlessly, that takes away a significant cost to businesses. There's an investment initially, but if we all get to a position where a lot of this tax administration becomes a lot easier through the use of these technologies. It's a number of different technologies together are going to simplify things. Are we there today? No. Will we get there in the next 5 years? Most likely.
Following up on that point, Ben, and maybe George can help answer this, how big a obstacle will be, how big a problem is it potentially that the market proceeds at a much faster rate than regulators are ready for? So obviously you've got this smart contract, as you said, you've got an audit trail, you've got all this transparency, but how are the regulators going to be able to tap into that? George, in terms of your kind of work and kind of encouraging the InsurTech industry in Asia, how important is consultation with regulators on this kind of, so they can play ball?
I think the regulators definitely have a big role to play to enable new kind of innovation. So far, what I've seen around the region is that most of the regulators in the region are receptive and very interested to support a prudent innovation. So there's been always kind of the effort. Obviously, each location has a slightly different approach. For example, in Japan, it's very, very rules-based. And even though if they want to encourage innovation, it's very kind of a incremental innovation, where we see maybe places like Singapore and China are being kind of a much more risk-based. So they're allowing things to proceed in a very fluid way. I think Malaysia is kind of a good location here because there is a lot of encouragement from a regulator as well when it comes to new technologies, experimentation, and do it in a prudent way. So definitely in terms of the role that I see regulator playing and how the regulators are playing it, it is a very positive current relationship, where maybe in the past there was a little bit of a mistrust when new things were introduced from the insurance industry. Now I think there is a kind of a more of a level of trust and a partnership, especially when it comes to new things, which is unknown to both the insurance industry as well as the regulators. So it's kind of like, let's do something together, let's be transparent about it. And at the same time, I haven't seen much of a pushback from the regulators where they would say, no, you cannot do something, where it seems like it's a logical win-win for industry as well as for the customers as well as kind of a broader market.
And Ben, are you confident that tax authorities are better keep up?
I mean, if you look at it, the tax authorities are actually ahead of the game compared to a lot of people in different jurisdictions. So in Singapore, for example, the tax authorities have invested a lot in the use of technology and big data and AI to effectively determine who they're going to audit. So they're using, tax authorities are very sophisticated in their collection of data. The UK, HMRC, again, similarly, they are using data to work out which hairdressers are not declaring the right amount of tax because they're getting cash payments, and they can work out and they can see what you're spending. So tax authorities are waking up to the cash society, and they're ahead of the game. I think one of the concerns actually we see with technology and regulators and the IAIS, so the International Association of Insurance Supervisors, they had their annual conference this year in Moscow earlier this month, actually last month, so I think it was only a couple of days ago. And there was one session that was devoted to how do you regulate the cloud? Okay, so the regulators are concerned around data being housed in a jurisdiction in which they cannot wrap their hands around. So if you look at it and you look at insurance regulators today, they permit a certain amount of outsourcing, but generally that outsourcing is within country. And before entering into an outsourcing agreement, you have to get that agreement certified. The regulator has to approve it. Does that model fit for the cloud? When you have data hosted on servers that are outside of the country, how are regulators going to deal with this? And these are some of the challenges regulators facing. I can see a regulator nodding his head as I'm speaking about this. But there is a big challenge around what do they do, how do they manage that, and some of the cybersecurity risks that insurers face, not the products they're writing, but actually how do they protect their own data? Because you think about the amount of data that is there. Private blockchains is one way, but you only have to read some of the horror stories around Bitcoin and some of the exchanges that are hacked and people losing Bitcoin. So there are significant challenges around the use of data that regulators are wrapping their heads around. And at the moment, you still have jurisdictions that will prevent you from taking data outside of that jurisdiction. So the Chinese are very, very tight on that. The Indonesians, Malaysia as well in some respects. So when you have all of these issues, it creates some challenges. And I know, Shiwei, that you had some challenges when you were dealing with InsurWave around some of this as well. And where do you host data?
At this stage, not yet. However, just as both of you mentioned, I think this is in the horizon. And for our industry, it's important to engage with our regulators. And I think what George said in particular is to let them informed that also, I know that some of the regulators, like in the UK, the US, etc., they are looking into this together with the insurance industry, and they're supporting some of the overall technology innovation so that they also evolve through the time. They know what's going on, and they know how to regulate accordingly.
Thank you, Shiwei, and thank you, Ben. Jose, specifically on ratings or financial strength of insurers, what implications do you see these new technologies having on a captive or just a commercial insurance company's financial strength?
So the short answer is
Microphone.
sorry. The short answer is there is a tremendous impact, right? So the rating process has basically 4 steps. The first step we call balance sheet strength. So we need to assess how strong the company is from a financial perspective, all right? And in this assessment, basically, you're looking at what happened until now. So it only talks about the past. So a rating or a financial strength rating is not, is not only the result of balance sheet strength. It's more impacted by what happens next. So what is the operating performance and what will it be expected to be in the next 5 years? So how are future cash flows going to be generated? What is the risk underlying these future cash flows? So you have balance sheet strength, which basically looks at the past. Then you look at the operating performance, which looks at how the company is going to generate future cash flows. Where are those cash flows coming from? What are the risks involved? Then you have the third block, which is business profile. Here you look at basically what underpins operating performance. So is the brand a very well-known brand in the market? Is the management a very, is the management a good management team? How does the company use data and technology to manage their risks and improve their efficiency in terms of client service, in terms of dealing with all the operations they have to deal with? So business profile is the third step. That's where, for example, innovation is an important part of that, because we really look at how innovation is embedded in the company's culture and how management uses innovation to drive the business going forward. The fourth block is risk management. And this can actually raise the rating by 1 notch or downgrade the rating by 4 notches. So if we believe the ERM of an insurer or a captive, because for us captives are insurance companies, they may be simplified insurance companies. Some of them actually are more complicated than even some other insurance companies. But captives being, even though being simplified insurance companies, they are insurance companies, and we rate them the same way we rate any other entity. So when we look at risk management, we look at what is the risk framework. So how exactly does the company define risk appetite? Which risks do they look at? What is the risk tolerance by risk? And what is the plan that will be executed if the risk falls outside the risk tolerance? The other thing we look at is, with the knowledge we have and the information we have in the insurance industry, we compare the risks we know are key to the business to see how that company is addressing those particular risks. Because sometimes they may be missing some risks or not really giving it enough importance. And this is dynamic. I'll give you an example. On data. Very recently, that in Europe, the GDPR, which is General Data Protection Regulation, was enacted. And if for some reason a company is breached and the information regarding clients is used by another third party, the fines can go up to 4% of the premium. As you know, not many companies these days have 4% profits measured as a percentage of premium, right? So this can actually be a game changer. And it's not only 4% of the premium, it's the maximum between 20 million euros and 4% of the premium. So if it's a small company, it can take the company bust. So if it's a company writing less than 20 million, then actually the fine could be 20 million. So we're really talking about issues where new risks evolve, and we need to see that in the ERM, these risks are being captured, and there is a clear way in which the risks are being mitigated, what tolerance is accepted, and if the risk falls beyond the tolerance, what actions are taken.
Thank you, Jose. Can we pull up the questions that are coming in? Hopefully there are some questions that are starting to come in, and we'll go through them. We'll start going through those in a second, but while I start digesting some of those, George, could you just maybe give us we've been quite positive. We've been talking about some of the great opportunities which InsurTech can provide to the insurance marketplace in Asia and other places. But what's holding things back? Not necessarily just in Asia, but generally, what do you think is holding back some of these innovations really making headway into the industry?
I think the thing that still is pretty prevalent in the industry, and I think it's holding back the real momentum, is that there is this reluctance to do big changes. So I kind of look at some of the examples that are happening in terms of the innovation within the insurance companies in the region, and it seems like a lot of it is still very at the incremental level. So it's a kind of I call it a safe innovation. So we see examples. I think blockchain is a good example of saying we want to try something, but it's very kind of a narrow use case where you try something, dip your toe in the water without changing the real fundamentals behind it. And I think in some ways that is really holding back the bigger and the more significant change that needs to happen in the industry to really kind of transform it. Somebody will take that big change step, and we've seen some of the examples of that starting to appear in the region. But I think in the biggest scale, most of the industry is still looking at the very kind of a narrow cases rather than going and saying like full stock, let's do a big innovation change that changes things that are fundamental. So by that I mean changes the products, changes the parts of distribution, changes part of the service proposition and kind of how it's packaged. Because to me, this is much more of a part of the DNA. And for that to change, there's a lot of other linked parts that is difficult. This change is difficult change. So far, I think the change that has been happening is a relatively easy change because it still takes us things that are not linked together.
Thank you, George. There's some really good questions coming in. I think we can start going through a few of those. I want to, while InsurWave is still relatively fresh in memories from Shiwei's presentation, Shiwei, do you know, in answer to that third question there, who should initiate the project of using blockchain technology in a transaction? Do you know how the InsurWave was born? How was it Maersk coming to their insurance partners? Was it insurance people going to Maersk? How did that start?
In the beginning, I think it's EY together with Gartime. Gartime is a company that focuses on the blockchain technology. So there is a constant discussion between the consultancy as well as the insurers. And also the consultancy and insurers are talking to the clients. So in the very beginning, it's all coming together quite naturally. And the EY and the Gartime, they formed this InsurWave as a joint venture. And then the industry who working closely with EY and started this journey. So Maersk was also involved from the quite very beginning. And why Maersk, the client, is because themselves already has starting the blockchain initiative. So with that, you have the technology input and the technology background. It makes it easier and for the small group to have a very concentrated discussions. So this is why I think one of the suggestions from some of the people who directly involved in the project said, start small. And if you have an idea, talk to some of the peers, and also it depends on what kind of blockchain solution you have. For B3I, it's among the insurers and the reinsurers. So a few first come together and with technology company and say how we could transform these reinsurance transactions. And with InsurWave, it's the whole value chain comes together and how to address this, how to utilize really extract the value of our data when the whole process is so cumbersome. So there are different drives, but it's very important to start and experiment. But your own technology background is important because if you engage with, say, if it's another client, they are not involved in blockchain at all. So it could be difficult to really understand what's the needs and how that blockchain can really address some of the issues.
I saw some of this in practice, actually. So in February, we hosted a captive summit in London. And our opening keynote panel was on blockchain and international programs. And we had the blockchain leader from Catlin talking about InsurWave. We had the blockchain leader from AIG talking about the Standard Chartered bank example. And it was really interesting because it was a really engaging panel. And I watched about 7 or 8 large captive owners, as soon as that panel finished, went straight to those Catlin AIG experts and were like, okay, I think I'm already thinking about how this could be used on one of our programs. So in terms of initiating, I mean, as a novice, my presumption would be it's probably going to have to come from the client in some ways because they have a unique, every client has a different risk problem or insurance program structure, and they might think, oh, it could apply here or it could not. I guess the question they need to ask is, to the experts, could it apply and how could we apply it? And in terms of who pays for it, I presume a bit like B3I and InsurWave, it's a consortium of companies, isn't it? So I presume that's one of the benefits, is it is a shared cost of developing technology?
Yes, it is, yes. And also for newcomer, that it depends on their technology development. So if they have not already, then they don't need to contribute that much. But if they need to build that for that, then it's a cost attached to that technology build up. So the cost itself is because there is this joint venture, and we also have a stake in the joint venture, like 5%. So the funding is through the consortium.
Okay.
Yeah, and a newcomer would also either contribute to the technology development just for their bit, or if they want a bigger engagement, that could also be further discussed, I think, yeah.
Thank you. Ben, you seem keen to answer one of those questions. I'm going to take a punt which one it is and tell me if I'm wrong. I'm guessing you're really keen to talk about anti-money laundering.
Yeah, I was going to, I mean, that, and the other thing I was going to say, I was going to add something to what Shiwei was saying.
Sure.
I think one of the things around this is it's all about relationships. So, and the use of InsurTech and other new technologies. It's around building a community. What George is doing and others have done in other jurisdictions is build that community, and you see great things happening through meetups, through just having those organic conversations, through things like this, that actually just the more people talk to each other, the more you actually realize that you can use some of these technologies because you understand them better. So that was just something I was going to there and plug, sort of getting involved in those communities. The other thing around AML, CFT, I think sort of there's been a lot of press around AML and blockchain in the context of Bitcoin, in the context of some of the other cryptocurrencies. There's two issues around this. One is the amount of spend that some of the large financial institutions are currently doing around their own systems. So there is a lot of spend both in consortia and also with individual banks developing their own systems to interrogate the source of funds that are used in Bitcoin transactions and other crypto transactions. The other point around this is it's really easy to, well, it is potentially easy to get money into crypto. It's really hard to take money out of crypto and wash it, okay? So yes, you can use crypto to put, you can convert cash into crypto in certain jurisdictions in an easy way. The real challenge is how do you convert your cryptocurrency into something which you can then use and get into the mainstream banking system. So those are two things to point out. But I think around the bigger question for this is actually around sanctions. So AML is one piece, but the second piece and the harder piece that's going to be a challenge for people is around sanctions. And it's both a good thing and a bad thing. So blockchain, going back to the smart contract use, going back to some of that type of thing, you can very quickly, and one version of the truth, you can very quickly understand whether you are insuring risks that are subject to sanctions. You can work out what risks are there, how do you deal with those types of issues. There is also a piece around compliance, and that goes back to the question around what are people doing around investigating source of funds? And like I said, I think that we'll see within the next 12 months it becoming a lot harder for individuals to put money into crypto, and you'll also see that challenge and those systems also being used in the context of sanctions and being able to better understand your risks that you're insuring and get you into a situation where actually blockchain is something that makes it a lot easier to deal with sanctions and a lot harder.
On that second question, thank you, Ben. On that second question, I think we may have pretty much just dealt with it, but on the question about are there challenges for blockchain in complying with regulations since blockchain is a decentralized concept? First of all, is it correct to say it is a decentralized concept?
Well,
we've got a difference of opinion on the panel, I think.
I mean, it depends what you've got public and private blockchains. A public blockchain is by its very nature, it is available and it's accessible to anybody. A private blockchain, such as something that InsurWave uses, is a controlled environment. Okay, that controlled environment allows a significant amount of reporting to regulators, and is something that can be built into that environment to enable regulators to regulate it far more easily than transactions that take place outside of the blockchain.
Anything to add, either of you, on that?
No, I think the part that I'll add, and I think Ben started a little bit of that in his first part of the comment, was that blockchain by itself is an interesting technology, and I think that there's definitely applications to insurance, but I think people kind of go down this a bit of a rabbit hole of it becomes like a peninsula to everything. It can solve all of my problems and it can make me look wonderful and digital tomorrow. But I think with what we've seen is with most of the technologies, it takes time, and it's a lot of the times it's convergence of multiple technologies that is really driving the big change. And the questions that I'm seeing here is a good representation as well, because all those questions need to be answered, but it's not by people sitting here on the panel, it's by you guys doing it yourselves. So it is very much about this experimentation and getting out there, putting the skin in the game and saying, okay, we're going to run this experiment of doing something on the blockchain. This is a problem that we're looking to solve. We can solve it together with a startup, or we can solve it together with another partner. But it's very much about doing it. And it's also the other piece of advice is don't embark on a one-year project. Kind of do a bite-sized project first. Do something that's a kind of a pilot, which is 3 months, very quick sprint, get something out of the door, see if that really validates your initial assumption. And that's kind of the new way of doing things. And I think that's moving away from, running this multi-year projects that people have a hypothesis, and by the time that the project is done, nobody out of the initial team is around, and it kind of lost its meaning. And to me, that's the fear that I have about a lot of this blockchain initiatives, is that the vision is very, very grand for it. But it kind of it starts on this grand vision, and it goes down that path rather than saying what's the smallest impactful problem can we solve tomorrow or 3 months down the road, and then go down that path rather than trying to kind of solving this grand big problems, which will definitely come. But I think in terms of the maturity of technology, is still very, very early days. And what we've seen a lot of the times kind of repeat itself in terms of the cycle is that it goes through that hype curve, where in the beginning they misestimate the expectations for what the technology by itself can solve, and then everybody says like AI, blockchain, it can solve all of my problems tomorrow, right? The AI is going to misplace agents, blockchain is going to misplace distribution, it's going to be a completely different world. In the long term, it does have a very significant impact, but it needs to start by smaller changes, and kind of that plays out probably on a 10-year scale. But within that first 2-3 years, people misestimate and say like, this is going to go this way, where actually it goes a lot flatter, and then it comes down 2 years later. People say, oh, we thought the blockchain is going to solve our problems. Reality is not. Let's go back to doing our business. And that's where the real change slowly, gradually is going to accelerate. So it's important, the point is important to start now doing small things, so that by the time that the real change comes 5 years down the road, you're ready and you're prepared, you understand what it is, because by that point, the real fundamental change will happen.
Thank you. And Jose?
Just a very quick comment. I think from an insurance company perspective, or from a captive perspective, when you introduce a new technology, regardless of which technology you're introducing, the first thing you need to keep in mind is the biggest barrier to innovation in the insurance industry is regulation, number one, and number two, the legal framework that applies to the business you do. So those are the two biggest barriers. So from an insurance company perspective, that is a risk. So when you introduce a technology, normally people do just a financial analysis. Okay, this is what it costs, this is what the benefits are. You do, project the present value of future cash flows, and you say, well, this is going to be good. But you're forgetting the risk. And that's why I focused before on the importance of having proper ERM. A proper ERM should capture those risks and really generate the right questions to management when these decisions are made. And it's extremely important to address these risks because that can not only have a huge financial impact in the insurance company, but it can also actually put in jeopardy your long-term survival of that insurance company.
Thank you. Shiwei?
I think one thing to add to both of you is that it's very true. That is, for this kind of blockchain initiatives or similar technology initiatives, in the beginning, especially in the proof of concept stage, it is quite hard to quantitative what exactly will be the financial benefits. Because at that stage, what's core to that is a set of questions. What are the problems you are going to address? What the technology, whether this technology you are using, be it AI, blockchain, whether that can address that problem utilizing what we know now, and then try it out. So it's very much a fundamental change from how we plan, just as Jose said. And also, as George mentioned, it's to do it now, do it small, because it's not the technology itself is going to solve our problem. It's we are going to solve the problems our company is facing, our industry is facing, and the whole economy is facing. So engage in the community, such as this captive arena, as well as a Parima, and also InsurTech. And this is why some of these incumbent ideas really get realized in Europe, in the US. It is because those already have that community. They started a bit early on. However, Asia, it's a very dynamic region, and we have so much to offer. The technology, the different kind of a cultural and economic background, and that can, and we need to rely on ourselves to see, okay, what are other regions are doing now, whether this is applicable to us, is there any unique issues we need to address, how to do that, which technology to do. Any companies or any individuals are thinking such things, link to each other through George and through arenas like this. So I think it's really start from ourselves.
Great, thank you. Our technology friends, can we remove those top three? We've answered those top three questions. I just want to see what else we've got coming through. One of the questions I already saw was, so do mature captives have their own technology platform, or do they use ones provided by reinsurers? I mean, I presume, Shiwei, when you work with captive clients, large captive clients, obviously you do have your own technology platforms, I presume, for claims management or tracking, fronting fees and everything. I'm aware of some independent software providers who are definitely chasing captive business and want to offer technology platforms to captives in terms of how to manage that process, but presumably you see a combination. Some captives can manage it themselves, but some rely on the insurance partner to manage.
I think this is a great question. That is when you see, okay, all these things are flourishing, and what's the best way to do? But sometimes the best way is to discuss with each other and to see whether that, for example, for the captive, especially for the captive fronting programs, you will need to track all of those local policies, premium payment, and also payment to the captives as well. And some companies would have their individual system, and we're also thinking how to feed data to other companies, so that instead of having silo systems, you have integrated data and it validate the truth as well. And again, we're also working with a client on a potential blockchain for the global program solution, and also that could facilitate this, such kind of a captive initiative as well.
Great, thank you.
Can I make a comment on the captives? In my view, I think it's quite dangerous if the captives have to rely on the reinsurer's software or technology, because that basically reduces the possibility of looking for the best solution. So I'm sure that captives that are managed by brokers, and we have a few brokers in the room, probably the technology is provided by the broker, not by the insurance company or the reinsurance companies.
Thank you. Okay, we've got a few interesting questions to choose from. That second one down, the first top one now, with blockchain, will intermediaries such as brokers and agents still be relevant in Malaysia, considering Malaysia is a conservative market in the way they operate? I would actually broaden that out. I think we can talk about Malaysia specifically, but I think in general, I think there is a question to be asked about the relevance of brokers and agents in a in a more digitized environment. Ben seems keen to jump in here. Do you see the end of brokers and agents?
No,
is this room next year going to be half empty?
No, so I don't see the end of brokers at all. I think what brokers need to do, and the challenge that faces brokers, is what services should they be offering? So it's not the end. The brokers have, and if you think about it in the captive managers and the captive space, one of the reasons you go to the captive manager is to understand the data that is out there for the whole market, because you only see part of the market, and a captive manager, a broker, has a number of clients operating in a similar space to you. So they provide a service through that data that they hold, and they're able to give you a greater depth and knowledge and understanding. Now, the question then becomes for brokers, what do you do to change some of the products you offer, and taking what you offer rather than being from a product base to actually being far more of a service? So how do you provide services to your clients to make sure you maintain relevant in the context of greater transparency, digitization, etc.? And I think that there's plenty of opportunities out there for brokers to do that, given the amount of data they hold and the fact that they still will have access to more data, because through the aggregation, than you as a single client will have.
Great. Okay, I'm going to have to choose between doing questions or our last poll. If we can bring up the last poll question, just to finish up, because we've got 30 seconds before I get kicked off this stage. So we're going to revisit what we kind of asked you at the beginning. So if you please open up your Slido app. Having listened to this discussion, which technology do you think will cause the biggest disruption to Asia's insurance industry? And the options are the same as the ones we asked you, which ones you're familiar with. So artificial intelligence, blockchain, API, interface, big data, or none of the above. So which technology do you think will cause the biggest disruption to Asia's insurance industry? One of the questions, while we just do that, one of the questions I saw pop up there, I'm going to ask a yes or no question to Shiwei, was we've got InsurWave, it looks great. Is the next thing InsurAir for the aviation industry? Could we see InsurAir happen?
Well, as mentioned, InsurWave is open to integrate with, to develop into other products, and aviation is, again, already some clients in that industry and some players already express interest. So itself, this is why I see the technology is amazing in the side that the openness, the control, the openness that it provides, so you don't lose the control, but you can enable the openness of the data, and then you also focus on your fundamentals. And that link back to the relevance question. Our CEO of the company always asks the insurance industry, are we still relevant to the whole world? How can we be relevant? Right, so it's to brokers, to insurers, to reinsurers, to everyone. And how could we remain relevant? The destiny is in our hand.
Great, I think that's a nice way to end. So just to quickly wrap up those answers, what I find quite interesting is I'm not sure we talked that much about artificial intelligence, did we? But so maybe we didn't convince you on blockchain or big data or API. But so the results there, yeah, so people seem to think that AI will be the biggest disruption. Again, very shortly, 'cause I know I'm going to get slapped wrist in a second. George?
I think it should be really, the option we missed is all of the above.
All of the above, okay. Of course. Okay, very diplomatic. Well, I'd also like to thank all of our panel, and thank you as well for all your great questions and your voting as well.
Thank you very much to members of the panel and the moderator.